Now, another good thing that's happened this year, and I think that's made this a good year, but not a great year yet, is that we've seen signs of broader mainstream acceptance of crypto. For instance, in May 2020, Paul Tudor Jones announced that he's buying Bitcoin Core as a hedge against inflation. In August, we had a public company actually invest $250 million of its reserve capital into Bitcoin Core. And in September, we've had some banks really get the nod to be able to actually hold reserves for stablecoin accounts. Okay, but these are sort of baby steps. And I think the reason 2020 is good but not great is you still need two things to happen. The first is you really need to get true mainstream adoption of crypto through the institutional channel. And crypto is too small today. It's not 10% of liquid assets. Even if you aggregate the entire market cap of all crypto, it's not even 1%. It's 0.1% of all liquid assets in the world. And this is a map. Each of these squares represents about $100 billion, and you could, or 200 billion, sorry. And as you can see, crypto collectively is just a little tiny little dot. It's smaller than gold, it's smaller than art, way smaller than equities or bonds and real estate. So I think until crypto becomes a much larger share of total assets, it's not going to be on the radar for institutions. But that's not a bad thing. Take a look at Tesla. I think it's a case study in how when an asset goes from being a retail asset to institutional, the institutional investor overnight transforms the price or the valuation of an asset. So Tesla has been dead money for 5 years, stuck at around $200. This is pre-split. And as you can see, the minute it became on the radar for Russell 1000 institutional investors, the stock went parabolic. That's the lesson. You can take anything, even a huge mature company, once it becomes an institutional asset, you'll see a huge change in price.